10-year note yields move lower after a weaker than expected non-farm payroll number came out today, trading all the way down to 364. Yes, that does mark a new year-to-date low in yields. However, we did see yields creep higher into the afternoon, getting back above 370, actually settling very close to unchanged on the day. So a lot going on. We got the jobs data that came out weaker than expected, which many had thought would have prompted more aggressive rate cut odds from the Fed fund futures, but it didn't, because later after the non-farm payroll number, we heard from New York Fed President Williams as well as Fed Governor Waller, both agreeing that rate cuts were necessary, but neither was committed to how aggressive the Fed might be. At the end of the day, when the dust settles, Fed rate cut odds for a 50 basis point cut still hovering around 30%, but well off those 40 to 50% levels we had seen earlier in the week. Again, that's a FOMC meeting not until the 18th of later this month. So clearly the market still has a little time between now and then. But ultimately, the weaker jobs number, while it did lock in the 25 basis point rate cut that we've been pricing, didn't really do much for 50. So it'll be interesting to see what happens as we move forward. That in itself lent 10-year note yields to move lower and then creep back higher, again, ending unchanged or near unchanged, back above 370 on the session. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com. And after the buildup, the pre-non-farm payroll buildup and volatility, things headed south. Yes, we did see volatility hold firm for much of the morning after the number came out, and we saw yields moving lower very quickly. But as we started to see yields creep back higher and kind of get their footing after the morning session, after the morning data came out, we did see volatility fall off from those pre-non-farm payroll highs, closing lower on the day. Lastly, let's talk about what we have next week. The fun just continues. We get inflation data via CPI and PPI. We also get the refunding with the 3-year, 10-year, and 30-year auctions. And then we won't get any Fed speakers as they enter into the September FOMC blackout period. So market will have to kind of start to use its own judgment here as it waits, obviously, for FOMC, which doesn't come until the week after on September 18th. So a busy week here ahead and during the jobs data. We saw a weaker jobs report. We saw yields move lower to new year-to-date lows and then creep back higher to 370. All this ahead of next week's inflation data, including PPI, CPI, as well as more auctions via 3-year, 10-year, and 30-year.